You know, what we're seeing right now in the market, it's like a tale of two completely different realities clashing with each other. It really feels like the market is in a giant tug of war with itself. On one side, you have this massive, powerful force of geopolitical fear just pulling everything down. But on the other side, you have the absolutely explosive force of the AI revolution, yanking us toward a future that looks nothing like the present. So, let's unpack this collision.
So let's start with that first reality, fear. Take a look at the numbers from March 20th. It was just a sea of red. The Dow, the S&P 500, and especially the tech-heavy NASDAQ, they all took a pretty serious dive. But this wasn't just, one bad day. It was really just the latest chapter in a story that's been getting more and more worrying.
4. What does that mean? Well, that's how many weeks in a row the major indexes have been dropping. For the Dow, that's the longest losing streak it's had since 2023. So this isn't just some blip on the radar, it's a sustained downward pattern. And it's definitely got Wall Street on edge.
And look, this isn't just about seeing red numbers on a screen. This consistent downward trend is pushing key parts of the market right to the edge of a really significant technical line in the sand, a milestone that tells analysts, okay, things are getting serious now.
And that line in the sand? It's what analysts call a correction. Throughout the day, the NASDAQ got this close to hitting that 10% drop from its recent high. It just managed to avoid it. But the Russell 2000 index, which tracks all the smaller companies, well, it wasn't so lucky. It officially closed in correction territory.
So, where is all this anxiety coming from? Well, you can pretty much trace it all back to one single massive global event. For weeks now, the market has been swinging almost entirely based on headlines coming out of the Middle East, ever since the war in Iran kicked off on February 28th.
Okay, let's dig into that. Because this conflict isn't just some headline you can scroll past. It's sending these huge geopolitical shockwaves through the entire global economy. And it's happened so fast. Look at this timeline. The war kicks off at the very end of February, and boom, almost immediately, you see oil prices start to spike. By the middle of March, the U.S. is moving warships into the Strait of Hormuz, which is a huge deal, and now we're seeing major disruptions to supply chains that affect everything from farming to microchips. And this is what that looks like in real dollars. $112.19. That's for 1 barrel of Brent crude oil, which is a global benchmark. We have not seen prices that high since way back in the summer of 2022.
And of course, that global price, it hits all of us right at the gas pump. The average price for a gallon of gas here in the U.S., it shot up by 93 cents since this whole thing began. That's a real, tangible hit for everyday people's wallets.
This chart right here just shows you how fast the whole story has flipped. Just a week ago, the market was betting there was a 0% chance of the Fed hiking interest rates. 0. Now, it's a 31% chance. All that talk we heard about rate cuts? Gone. Poof. Replaced by fears of rate hikes to fight off this new wave of inflation.
So, what does all this add up to? Well, according to Moody's, the odds of a U.S. recession happening in the next year are now at 49%. It's basically a coin flip. Okay, but here's where things get really wild. Because while all of that was happening, while the world was totally fixated on war and recession, a completely different kind of explosion was happening. It's almost like it was in a parallel universe.
And this quote just nails the feeling perfectly. We are entering phase 2 of the AI boom now. This isn't just about, cute chatbots anymore. We're talking about powerful AI assistants that could completely change how we work and live. And the amount of money flowing into this idea, it is just staggering.
$100 billion. That's how much Jeff Bezos is reportedly raising for a new fund. And what's he going to do with it? Buy up manufacturing companies and just pour AI into them to fast-track automation. That is an absolutely enormous bet on a total industrial revolution.
And it's not just him. At pretty much the same time, you've got Elon Musk unveiling TerraFab, this incredibly bold, audacious plan to build a brand new factory for the most advanced AI chips on the planet, with tens of billions of dollars in planned investment. And the vision here is just massive. We're talking about state-of-the-art 2-nanometer chips, and it's a joint project between 3 of his companies, Tesla, xAI, and SpaceX. The goal is to solve the coming chip shortage and power literally everything, from self-driving cars here on the ground to AI crunching data way up in orbit. This is way more than a project. It's a bet on the whole future of intelligence itself. So this brings us right back to the heart of that tug of war. How can these two things possibly exist at the same time? On one hand, you have a geopolitical crisis creating short-term panic, and on the other, a technological revolution promising this unbelievable long-term transformation. How does the market even begin to process both at once?
This is the big paradox, right? It's the question every analyst and investor is asking themselves. With the war going on, oil prices soaring, recession odds climbing, why haven't stocks fallen even further? What on earth is holding them up?
And the answer is right here. It's this tug of war. The market is being pulled in two different directions at the same time. For every negative headline about the war or inflation or supply chains, those are the headwinds. There's an incredibly powerful tailwind pushing back. The AI revolution, massive tech investment, the promise of automation. It's this incredible tension between short-term fear and a long-term, almost overwhelming optimism.
So to really get our heads around this paradox, maybe we need to stop looking at tomorrow's headlines. Maybe the answer is to zoom out, way out, and look at the much bigger long-term picture.
So let me ask you a question. If you had to guess the single best investment of the last century, the last 100 years, what would you pick? Some tech giant? An automaker? I bet the answer is going to surprise you.
Okay, you ready for this? The single best performing stock of the last 100 years was Philip Morris, a cigarette company. And the rest of the top performers were just as, quote, boring, a rock quarry, a railroad. But here's the really crucial part of that study. Most stocks fail. All of the net wealth created in the entire market came from just 4% of companies. Just 4%.
And that leads us to this incredibly powerful idea. Since it's practically impossible to pick that tiny handful of big winners ahead of time, the only reliable strategy is to own the whole haystack. The secret to owning a winner is owning all the losers, too. It's the core argument for diversification and for looking beyond today's chaotic, scary headlines. And that brings us right back to where we are today. The market is the perfect example of this challenge. How do we navigate the very real, very immediate shocks of the present, the wars, the inflation, while also participating in the technological revolutions that are going to create that next 4% of winners for the next century? That right there is the multi-trillion-dollar question.